This is the Friday, March 3rd, 2017 version of the Market Plus segment. Joining us now is Sue Martin. Sue, welcome back.
Thank you, Mike.
Really excited to have you. A lot going on in the markets today. One of the stories we didn't talk about on the program was the fact that cotton was higher this week. Sue Martin, first time in, 3 weeks probably. It's been a little while.
Yes, it is. In fact, the July got to $79.95.
Ooh, so we're pushing up against that 80. We're going to take it out?
Well, we certainly could. I recommend to producers that I would look at making cotton sales because wave 4 on the July contract's 83.55 or something like that, maybe 83.85.
Okay, so we're just a couple bucks shy.
Yeah.
And so when you're looking at wave counts, does that couple dollars, does that still fall within it? Like if we break 80, would you consider that as achieving a wave 4?
I call that more as psychological. Usually to get in the window, I would say you need to be around that 83 area.
Okay, so we might have a couple dollars to the upside, but still.
These are good prices and way better than it's been. Granted, the weather is key. Exports are up on cotton. China's been an importer of cotton. And so, and it's also an oil seed, though. We have to keep that in mind.
Even if the USDA doesn't recognize it as such.
Absolutely, yes. So, but no, I think, and I looked at Dees cotton, and I think Dees cotton's already met a wave 3 and is working towards a wave 4. So, in fact, actually, around 75 cents, I think I'd be selling some. I think I wouldn't even hesitate.
Okay. All right, one of the other topics we didn't get a chance to discuss on the show because we had so much grain news was the feeder cattle market. We talked about the potential as we move into grilling season to at least lend some stability. Would that be a fair way to put it on the live cattle side?
Yes.
Does that translate into stability for feeder cattle?
Well, the feeder market, I think we need to kind of keep an eye on it. It's been kind of nasty this week. But there is a seasonal pattern for feeders that you buy April feeders and sell June fats, usually around Monday of this month, and you hold it till the 1st of April. But I will say that the market to me on feeder cattle, we've got to get these deferred contracts higher on the fats or they're paying too much for their feeders. But the demand has been really good for feeder cattle. So I think that if I'm right on the fat market, I don't see feeders going down and April fats going up. So I think the market's going to find some support here. It might be that we start the week lower and then we catch our turn. But I think we're going to see something where the market tries to appreciate a little bit. And there is, I didn't look so much at the feeder chart, but the fats. April fats have a huge base head and shoulders bottom, huge. And that can't be, if we fulfill it and we need to get up through this 119 now, I think then, of course, the 120 is fair game and it comes out. Then you've got your market moving. That should be very price positive. But then as you go towards June, numbers pick up and, you're processing and that can be kind of negative. And maybe even the August, you sell August and buy December fats.
Okay. Sell August futures or or feeders or fats?
I would say fats in that light. But the thing is, the pattern is that you tend to, from an April high, you start eroding and you erode all the way into late August, something like that. So I would be hedging cattle on a rally. If I'm right on these Aprils, I so hope I am, but if I'm right on these April cattle, that's given us the opportunity to get these cattle hedged for the rest of the summer on into early fall.
Right, at prices that really, historically, aren't too bad. They're just bad looking back at our recent history of, 172.
Right.
That's
we always
still fresh.
Remember the most recent.
Yes. And it's too bad there's such painful prices to remember.
That's right.
Yeah. And so you said on Monday you'd be buying
April feeders,
selling June fats, and hold for 3 weeks.
Yeah.
Roughly.
Yeah.
All right. Now we've got some questions for you, Sue Martin. Questions from our fans and followers on Twitter and on Facebook. We encourage all of you to submit your questions to us every single week. The first one comes from Glenn in Bryan, Ohio. And he's asking us a question about how the market is changing. And he wants to know, do algorithmic trading models benefit or hinder the true impact of fundamental news in world markets?
I don't think it hinders. I think it probably enhances because I'm always of the opinion that you always turn markets from large supplies, and nobody can understand why, but it does, and they all get bearish up at the top, but the story's known. Corn would be a good one for that, wheat too. But then as you get going and you get those turns moving, the market knows ahead, and artificial intelligence takes many things into account, things that you and I don't do on a normal basis. And it can be looking at stocks that refer back to the commodity. It can be currencies involved in it. And therefore, it sees things and then it starts moving, and it moves with the trend. So it just is a way of kind of getting you there a little faster.
Gotcha. It amplifies
Yes.
kind of the fundamental market
Yes.
news. Interesting.
You know, the fundamentals are your trend.
Okay.
It's the technicals that catch the turns for you.
Gotcha. Well, okay, speaking of fundamentals, we've got a question here from Phil in Ontario, Canada. Phil notes that with November soybeans averaging $10.19, that's our insurance price for this year, versus $8.85 of last year. It's hard to believe that was just a year ago. We were $1.50 under today. He says the incentive to plant soybeans is huge. Will it happen? Will we see this 88, 90 million acres of beans, Sue?
I think we will. I think we will. And you know what's interesting? The only time, now my data goes back to 1960. The only time going back to 1960 on my data that we seen bean acres exactly equal or higher than corn was in 1983, the year of the PIC program. Now, ironically, the market's following dates pretty close to that year. And on top of it, you had a market that surprised you. We ended up going down hard into, I think we rallied maybe into early April, and then we went down into the end of June. And then all of a sudden we were like out of there and moving. Now, I looked at the acres that year, and acres declined from the March prospective plantings for beans, as they did corn as well, because that PIC program didn't come out before the March prospective plantings. So all of a sudden, you know, I think what they looked at is there was a huge setback in bean acres from what they originally thought, but the corn acres definitely took the huge hit. I
Okay.
think we lost almost 9 million acres that year. So when you turn around and you look at that, then what else happened? Weather kicked in. And we had a very warm, dry July, August. In fact, I can remember on our farm that we had corn the last week of August mature in 3 days. We had 3 days of 100+ temps, and the corn was brown by the end of those 3 days.
And it's not a great situation for soybeans to have 100+ in August either.
That's right.
So is that going to be an analog where we all talk 90 million and then see acres get whittled away throughout the year, do you think? Or if we say 90, are farmers going to do it?
Well, I don't know as if farmers will do that. One thing I think we have to also keep in mind is how many acres are going to shift back into CRP. I know ultimately we're losing 3 million acres estimated out of CRP, but there's other programs. There's the wetlands. And then there's also the pollinator program. And those are paying, I've heard some pretty good cash rents on
Yes.
those.
I've heard producers basically negotiating against Uncle Sam on some of this ground.
Exactly.
Yeah, or bidding against, I should
You know,
say.
I've had one client this week tell me that wetlands, he was getting $360 an acre, and on pollinator, $316, $317. That's not bad
No.
for these when you're looking at the times where we're at.
Yeah.
So, you know, I'm wondering just how much are we going to see shift that way, and could that also be ground that was corn that should have never really been probably corn that went into corn the last few years, 3-4 years, maybe that shifts back.
Okay. And if you can get $360 an acre on ground that shouldn't have been in corn in the first place, I'd say that's a home run.
Don't look a gift horse in the mouth.
Yeah, exactly. Next question for you, Sue, from Roger on Facebook. Roger wants to know, we've kind of talked about this a little bit, but let's just get you a little more specific, Sue Martin. Where is the grain market going to go between now and planting? Let's talk corn. Are we going to break this corn market any further before we get to March 31? Let's talk planting intentions before we start rolling the planters.
You could. We might get a little setback, but you know, if you look at the corn market, new crop corn, for the last 10 years, every year you've touched, what, 420? And I think we'll do it again. The market keeps pushing at that 404 area. The next level will be 414, then the 420, see, but actually the next level will be around that 437 mark, 439. But I think the market is winding up. We can kill a little more time in here, but I think this market's winding up for something better. And of course, my vision goes clear out into 2018, the middle of 18, where I believe you're going to see corn much higher than where we are today.
Okay.
So I pray for a setback. And I'm telling end users, you get a setback in this market in the next 2 or 3 months, lock it up. Because I do not believe our yields are going to be this year what we've enjoyed the last 3. Right. Even if they're trend line, yes, you can still have a pretty good carryout. Yeah. But will we be trend line? We've been blessed.
Yes.
And
so when you say lock it up, Sue, are you talking get long December and into 2018? Okay.
Yes. Yes.
Okay.
I would recommend they get their feed usage if they're an end user for feed. Get it protected. If you're a processor of corn, okay, get it protected. Soybeans, because if we do see El Nino come in, remember Brazil had their worst crop in an El Nino a year ago.
Yeah. All right. So now one of the things that you have talked about repeatedly, both on the program and here in the Market Plus segment, is waves. You talked about wave 3, wave 4. And so our commodity question, the phrase we're going to ask you to define is, what is an Elliott wave? What does it mean when you say wave 3 or 4?
Well, these aren't Elliott waves.
Okay.
That I talk about. Elliott waves are projections, and there's rules for it, like you'll have 2 equal legs and 1 smaller leg, that kind of thing, and you'll do an ABC correction and all that.
Gotcha.
These are different. These are the rule of 7.
Okay.
So anyone that's interested in that, just Google it, and you might be able to find the information on it.
Okay.
I can't believe you can find everything on the internet.
Maybe Google rule of 7 commodities, because that'll probably take you to some website that,
that's probably true.
Everything's on the internet. So.
That's right.
So that's what you're looking at, and so you use them as a tool to analyze market movements? Market movements,
and also to judge how much, what should I be doing? How extended is this move, you know? And there's, you might meet one level of projection on it, and then all of a sudden you have to start going to like a weekly or something like that and looking. But it's a very good, viable tool. And I've used it for years, and it's been very good to me.
And does it max out at 5? Is that where you really see the most extreme change if you're on a wave 5?
You don't see wave 5s only, but maybe to the downside. I've never seen a wave 5 to the upside.
I thought we saw a wave 5 to the upside in fat or feeder cattle during that big, but maybe we just saw it when it came down.
It was a wave 4,
Okay.
I think.
Okay, so wave 5.
But it was a wave 5 on the downside in December of, was that 2015?
Yes.
Yeah.
Okay.
That was a wave 5.
All right.
I've never seen a wave 5 on the upside.
Something to aspire to.
I guess.
All right. Well, Sue Martin, thank you so much for taking the time to join us.
Thank you.
Be sure to join us again next week when Ted Seifert joins me here at the Market to Market table. And as you may have noticed, ladies and gentlemen, it is fundraising time here at PBS. So please, if you find value in our program, consider making a pledge and invest in a service that provides you with the news and market analysis you've come to know and trust. And join us again next week when we'll explore how some producers are hedging against catastrophe. So until then, thanks for watching or listening. I'm Mike Pearson. Have a great week.